Welcome to the Blockchain Report, your daily rundown in the latest of crypto. My name is Taylor Nikolai. Do you know what a stablecoin is? Today we're going to explain what exactly stablecoins are and why they're important. In essence, a stablecoin is a cryptocurrency that is pegged to another asset. This currency is global and is not tied to a central bank. A stablecoin should have as low volatility as possible, as opposed to other cryptocurrencies that are highly volatile in nature. The ultimate goal of a stablecoin is to become a digital form of fiat-free cash that is incredibly stable in value. What is sound money? In order for a stablecoin to work, it must follow the requirements of sound money. Those requirements are the following. It must be a medium of exchange, it must be a store of value, it must be a unit of account, and it must be fungible, easily divisible, and easily moved. What do each of these requirements mean? For a stablecoin to be a medium of exchange, that means that the stablecoin can be used to facilitate the sale of goods without the need to barter. However, this is not the only requirement. Essentially, all cryptocurrencies today can be used as a medium of exchange. However, that doesn't mean they will be used to buy goods and services. That's because most cryptocurrencies aren't a good store of value. A store of value is a form of wealth that maintains its current value without depreciating in the future. As we saw in the beginning of 2018 in the cryptocurrency market, many cryptocurrencies declined significantly in value from their all-time highs. That means that many cryptocurrencies, while useful for investing and speculation purposes, are not particularly useful as an actual form of money. As such, many people who accept cryptocurrency as payment must exchange it into a stable currency within a relatively short period of time. Precious metals like gold and silver have often been used as solid stores of value. That is why when investors fear recessions and depressions in the economy, they buy gold and occasionally silver because they believe that precious metals will at the very least maintain their current value. So why aren't gold and silver today used as forms of payment? Like, why can't I go to the store and pay in gold?
I love gold!
While gold acts as a good medium of exchange and storage of value, it doesn't meet the requirements of being easily divisible and easily moved.
No.
Guys. This is like indestructible. What is this?
Yeah, you can't just cut gold into pieces. According to APMEX, the price of an ounce of gold is $1,293. Let's say I provide a service for somebody and I only need $200. That's the equivalent of 0.15468 ounces of gold. Even if you could cut gold into pieces, it's very difficult to measure the precise amount. And then it's hard to match that up to what the US dollar price is too. Cryptocurrencies, on the other hand, are very easily divisible and are often divisible up to 18 decimal places. You can't really divide gold into 18 pieces and then buy something at Kmart. By the way, gold and silver are super heavy, so good luck bringing those to Kmart. All cryptocurrencies can serve as a unit of account. A unit of account simply means that it is able to provide a unit of measurement that can be used to define and compare value. For example, you can use Ethereum as a unit of account because you can define value in how much Ethereum it costs. You could also use something like shares in a company as a unit of account, although shares aren't used as money because they don't meet any of the other requirements of sound money. Stablecoins are important for several reasons. It is important to have a digital currency that remains stable in value, similar to well-known currencies that remain relatively stable in value, such as the US dollar. Stablecoins fulfill the store of value requirement of money, something that even real-world currencies don't fulfill. Let's take a look at that second point. There's been several times in history when a currency has collapsed due to hyperinflation. Some examples include Weimar Germany. The German mark currency plummeted in value after a severe hyperinflation that caused the collapse of Germany's economy. Accounts of Germany at the time show how much the mark currency declined in value. Families were using money instead of wood to heat a stove because it was a cheaper alternative, and people had to shop with backpacks and wheelbarrows just to carry their money. Zimbabwe. Zimbabwe experienced extremely volatile currency prices in the late 1990s as a result of confiscating private farms of landowners. It's estimated that in 2008, Zimbabwe experienced a monthly inflation rate of 79.6 billion%. Venezuela. The value of Venezuela's bolivar currency has declined steadily and significantly against the US dollar for over a decade now, and experienced hyperinflation. Thanks for watching the Blockchain Report. My name is Taylor Nicolai. I hope you have a better understanding of what stablecoins are. If you want to stay up to date on all the latest crypto news and trends, be sure to follow us on Instagram at Blockchain Report. We'll see you next time.